Hey everyone, welcome back. Ever feel like understanding New Zealand's restaurant GST is like trying to nail that perfect sear on a scallop?
High stakes.
High stakes and, oh, so easy to get wrong.
Yeah,
Well, today we're diving deep into Miniviel's blog so you don't get burned.
that's right. We're serving up actionable advice, going to help you navigate this culinary tax landscape. Because for restaurant owners in New Zealand, GST isn't just about compliance. It's about running a smarter, more profitable business.
Now, Miniviel gets straight to the point. GST matters. Why? In New Zealand, it's like that invisible 15% shareholder in most of your transactions.
Precisely. Understanding this silent partner is crucial because it affects everything. How you price your dishes, how you manage your cash flow, everything.
Okay, that makes sense. But let's say you're just starting out, right? Whipping up a business plan alongside your signature sauce. When does GST even come into the picture?
The magic number is NZD $60,000. Once your restaurant hits that revenue milestone in a 12-month period, congrats.
Ooh.
But it also means it's time to register for GST.
And that's where things start to feel a little less like MasterChef and a little more like accounting class, right?
Yeah.
Filing returns, keeping track of everything.
It can definitely feel daunting, but Miniviel does a great job breaking down the process. They even offer a handy checklist, helps you avoid common mistakes, stay chummy with the IRD.
Because nobody wants a tax audit as their after-dinner surprise. Speaking of surprises, Miniviel talks about these two different pricing approaches, GST inclusive and GST exclusive. What's the deal there?
That's a key decision point for any restaurant. It's about choosing whether to bake that 15% GST into your menu prices up front
Okay.
or add it to the bill at the end. Each approach has its own pros and cons, and ultimately it comes down to what feels right for your brand and your target market.
So it's like choosing between offering a prefix menu versus a la carte. It depends what you think your diners will respond to.
Exactly. Miniviel suggests considering factors like your restaurant style, price point.
Right.
A casual bistro might lean towards GST-inclusive pricing for its simplicity, while a fine dining establishment might opt for GST-exclusive to maintain a certain perception of value.
Interesting. So how does a savvy restaurant owner decide which pricing strategy is right for them? I mean, we don't want to give customers bill shock with hidden costs.
Transparency is key. If you're going GST-inclusive, stating all prices include GST on your menu can prevent confusion. For GST-exclusive, a clear note like GST will be added at checkout manages expectations.
It's like including a little disclaimer on the menu. Our prices are delicious, and yes, GST is included. And speaking of transparency, what about receipts?
Miniviel emphasizes the importance of itemizing GST separately on your receipts. It not only keeps you in the IRD's good graces, but also builds trust with your customers. No one likes hidden fees.
Absolutely. It's about maintaining that open kitchen policy, even when it comes to the financials. Now, I know even the most skilled chefs can have a kitchen mishap or two. What are some common GST filing fumbles that restaurant owners should avoid?
A big one is miscalculating GST, especially if you're not using a point-of-sale system that automatically calculates it for you.
Oh, right.
Miniviel recommends double-checking your numbers and ensuring you're only claiming GST back on legitimate business expenses.
Right. So that new bread oven for your home kitchen doesn't count as a business expense.
Definitely not. Another common pitfall is missing those filing deadlines. The IRD is strict about deadlines, and late filings can lead to penalties that eat into your profits.
And nobody wants a side of penalties with their profit margins. Speaking of profits, Miniviel also delves into how GST impacts cash flow, which I imagine is a biggie in the restaurant biz.
Absolutely. Remember, you collect GST on sales, but you also pay GST on your supplies and expenses. Managing this inflow and outflow is crucial for keeping your business financially healthy.
It's like juggling those dinner orders during a rush. Timing is everything. So how can restaurants make sure their cash flow doesn't go as cold as last week's leftovers?
It's all about staying organized and keeping a close eye on your books. Knowing when you collect GST and when you owe it helps you plan for expenses and avoid those last-minute scrambles for funds.
Makes sense. Now, I'm picturing those restaurants that import fancy cheeses, exotic spices. What happens to GST then?
Great question. When you import goods, you typically pay GST upon their arrival in New Zealand. But don't worry, you're not stuck paying GST twice. You can usually claim back the GST paid on imports as input tax when you file your return.
Okay, so it's like a little GST boomerang. It comes back to you eventually.
Exactly. Think of it as a perk for bringing global flavors to your menu.
Now, we've covered the basics of registering for GST. different pricing strategies, and even those common GST filing traps to avoid. But every restaurant has its own rhythm, its own way of doing things. Does Manuvial address how GST impacts different restaurant models? I mean, we're talking cafes, bars, catering services, even those food trucks popping up everywhere these days.
You're right. It's not a one-size-fits-all situation.
Right.
Manuvial dives into those nuances, highlighting how GST applies to different players in the food scene. Let's start with cafes.
Okay.
They've got dine-in, takeaway, maybe even some retail items like coffee beans.
Talk about wearing a lot of culinary hats. So GST applies to all those different offerings.
Absolutely.
Yeah.
And while that standard 15% rate generally holds true, the challenge for cafes lies in accurate tracking and calculation across all those different income streams. Take takeaway orders, for instance.
Okay.
Things get tricky when you're dealing with meal deals or discounts. Suddenly, that GST calculation requires a bit more attention to detail.
It's like trying to nail the perfect latte art while managing 5 other drink orders simultaneously, right? You need serious precision. Speaking of juggling multiple elements, let's move on to bars. They've got food, drinks, sometimes even live music or entertainment. How does GST work in that kind of setting? With bars, you've got like a whole other layer of complexity, right? You're dealing with GST on food, alcoholic beverages, non-alcoholic beverages, and then you might have service charges or entertainment fees on top of that.
Absolutely. And accuracy is crucial, especially when those service charges are calculated as a percentage of the bill. You want to ensure you're applying GST correctly to those as well.
It's all about keeping those receipts clear and accurate, both for the IRD and for your customers' peace of mind.
Exactly. Now, let's shift gears from bars to catering services. They're out there creating amazing spreads for weddings, corporate events, even like film sets.
Oh, wow.
So where does GST come into play in the world of catering?
That's a great question. Catering seems even more complex than running a typical restaurant. You're coordinating so many moving parts.
You're right. It's a whole different ballgame. With catering, GST goes beyond just the food and beverages. You're also factoring in the service element, things like event planning, rentals for tables and equipment, delivery fees, and so on.
Wow.
It can get pretty intricate.
It sounds like caterers need a whole separate pantry just to store their GST paperwork.
Organization is key. And speaking of structured setups, let's not forget about restaurant franchises. They have a unique set of GST considerations due to their business model.
Right. They're part of a larger culinary empire. So how does GST work in the world of franchise restaurants?
Well, franchisees, like any other restaurant, are responsible for managing GST on their sales.
Right.
However, they also need to navigate GST on the franchise fees and royalties paid to the franchisor.
So it's like paying a culinary tax to be part of the kingdom.
In a way, yes. And those franchise fees and royalties are usually subject to GST. But the good news is that franchisees can typically claim back this GST as input tax credit, as long as they're registered.
It's like getting a royal discount for being part of the court.
Precisely. Now, many franchises also operate with a centralized purchasing system, where the franchisor handles bulk purchases for ingredients, equipment, and things like that.
That makes sense. Got to maintain that brand consistency across the kingdom.
Exactly. But this centralized purchasing, it adds a layer of complexity to GST tracking. Both the franchisor and the franchise need to be on the same page to ensure accurate reporting. It's a team effort.
It's like a culinary ballet, requiring perfect synchronization to pull off those flawless moves. Now, I know we've covered a lot of ground here, but before we move on to other restaurant models, are there any other GST considerations that are particularly relevant to cafes, bars, caterers, or franchises?
One thing that applies across the board, regardless of your restaurant model, is the handling of tips and service charges.
Ah, yes, the age-old question. Who gets what when those generous bills come in? So tell us, what's the official word on GST when it comes to tips and service charges?
In New Zealand, it all boils down to intention. Voluntary tips, those heartfelt thank yous given directly to a server, are generally GST-free.
Okay.
However, mandatory service charges, like those automatically added to large group bills, fall under that 15% GST rule.
So a spontaneous act of generosity is tax-free, but those built-in gratuities are fair game for the taxman. Makes sense. Now, we can't talk about the modern restaurant scene without mentioning online orders and those ever-present delivery apps. It's like a whole other dimension of dining these days.
It certainly is. And GST doesn't stop at the digital door. Whether it's a direct order from your restaurant's website or a ping on a third-party platform like Uber Eats, GST applies to both the food itself and those delivery fees.
So even in the digital age, there's no escaping the GST net.
Precisely. And this is where things can get a bit tricky. If you're using a third-party platform, it's essential to carefully review their fee structure. They might already be including GST in their cut, which you'll need to factor in when filing your return.
It's like deciphering a secret menu of charges. Now, let's say a restaurant owner, caught up in perfecting their signature dish, forgets to register for GST on time. What happens then? Do they get a visit from the culinary police?
Let's just say the IRD doesn't take too kindly to missed deadlines. Ignoring that NZD $60,000 registration threshold can result in some unpleasant consequences.
Yeah.
Late registration fees, interest on unpaid GST, and potentially even having to pay GST on past sales retroactively.
Talk about a recipe for financial indigestion. The lesson here is clear. Don't procrastinate on those tax obligations, no matter how tempting it is to focus on perfecting that soufflé.
Absolutely. Now let's shift gears from potential pitfalls to potential perks. Can restaurants claim GST back on renovations? Let's say they're giving their space a fresh coat of paint or upgrading their kitchen equipment.
Now that's a renovation reveal I can get behind, so tell us, can they or can't they?
If those renovations are directly related to the business, then it's a resounding yes. You can typically claim back the GST paid on materials, contractor services, even that shiny new espresso machine.
Ooh,
Yeah.
that's like finding a golden spatula hidden behind the old deep fryer. But what about renovations that extend beyond strictly business areas, like sprucing up a staff room or adding a patio for those after-work team drinks?
That's where things get a bit murky. GST claims need to be for expenses directly used in business operations.
Okay.
So, while a swanky new staff room might boost morale, it's unlikely to get the GST green light.
Fair enough. It's about keeping it strictly business when it comes to those tax breaks. Now, one last question before we move on. Many restaurants generously host charity events or fundraising dinners. How does GST factor into these feel-good feasts?
It's a noble endeavor. And the good news is that pure donations, those given without any goods or services in return, are GST-free zones.
So if someone donates $100 to the cause, that entire amount goes to the charity? No GST strings attached?
Exactly. However, if the restaurant sells food or drinks during the event, even if it's for a good cause, GST still applies to those sales. Transparency is crucial here. Make it clear to your patrons what portion of their purchase goes toward the donation versus what covers GST and costs.
It's about finding that balance between generosity and good old-fashioned GST compliance. Speaking of balance, perhaps it's time we move on from those frequently asked questions and serve up the final course of our GST deep dive. So as we're digesting all this GST knowledge, what are the key takeaways our listeners should be plating up for their own restaurant journeys?
First and foremost, remember that GST is a constant ingredient in the recipe for running a restaurant in New Zealand.
Right.
It's not just about avoiding penalties. It's about making those smart decisions that contribute to your overall success.
It's like mastering those essential culinary techniques, knowing them inside and out just makes everything you do in the kitchen run a little smoother.
Exactly. Second, whether you choose to build GST into your menu prices or add it at the end, transparency is key.
Yeah.
Clear communication with your customers builds trust and helps you avoid any confusion or misunderstandings.
Nobody wants to feel like there's a hidden cost lurking under their dessert menu.
Precisely. And finally, just like you might consult a master sommelier for your wine list or a seasoned chef for, a new recipe, don't hesitate to seek guidance from a qualified accountant when it comes to navigating the ins and outs of GST. They can help you. They can help you make sure you're on the right track.
It's like having a trusted advisor in your corner, helping you navigate those tricky financial recipes. Now, for those who are ready to take their GST knowledge from simmer to a full boil, what's one final thought-provoking morsel you'd leave them with?
Here's something to consider. Knowing what you now know about GST and how it impacts your business, how can you strategically leverage this knowledge to your advantage? Could you adjust your menu pricing, not just to cover the tax, but to actually enhance your profitability or strengthen your market position?
That's a recipe for success if I've ever heard one. It's about understanding that GST isn't just a cost of doing business. It's actually a factor you can strategically manage to your benefit. And on that delicious note, we've reached the end of our deep dive into New Zealand's restaurant GST. We hope you found this exploration insightful and maybe even a little bit appetizing.
We certainly have. It's been a pleasure dissecting this topic with you and sharing these valuable insights.
Until next time, remember, knowledge is the secret ingredient that can take your culinary creations to the next level. Bon appétit.